Here's a riddle for you. Imagine a country that has had, let's say, several presidents in just a handful of years. A country with political noise, protests, and constant headlines. You'd expect their currency to be in free fall, right? Like a roller coaster with no brakes.
You would. That's the standard textbook reaction.
But what if I told you that this currency is actually the Swiss franc of Latin America? That despite everything, it stands like a rock while its neighbors crumble. Today, we are decoding the mystery of the Peruvian Sol. I'm Alex.
And I'm Milena. And honestly, Alex, the story of the sol isn't just about money. It's a survival guide for the modern economy.
Welcome to the Global Ledger. Let's dive in. Elena, we're looking at a comprehensive study today that forecasts the future of the Peruvian sol, or pen, between 2025 and 2030. But before we get to the crystal ball stuff, we have to address the present. Why is everyone talking about the sol as one of the most stable currencies in Latin America?
It really is fascinating. Usually when we talk about emerging markets, we talk about volatility. But the sol has consolidated itself as a fortress. It's not just luck, it's a specific cocktail of macroeconomic, institutional, and commercial factors.
Right, it's not magic, it's math.
Exactly. And this matters because in a world where the US dollar is swinging wild punches, understanding why the sol stays standing helps us understand resilience. Whether you're an investor or just someone trying to save money, this is a masterclass in stability.
Okay, let's unpack the engine room. Chapter 1 of our document calls these the macroeconomic fundamentals. What is the bedrock here? Because it can't just be good vibes.
No, definitely not vibes. It starts with fiscal discipline. Historically, Peru has kept very moderate levels of public debt.
Give me a number. What does moderate look like?
For many years, public debt has been below 30% of the GDP.
30%. That is incredibly low compared to the US or Europe.
It's stellar. Compare that to countries like Argentina or Turkey, where over-indebtedness leads to those scary currency depreciations we see on the news. Peru built a reputation. When you don't owe everyone money, investors don't panic sell your currency.
So, rule number 1, don't max out the credit card. What's rule number 2?
Precisely. If you have 100% annual inflation, your money melts. It buys less every day. A low, stable inflation rate tells the world, this paper money in your pocket will still be worth something next week.
And they back that up with a war chest, right?
The international reserves. This is crucial, Alex. Peru keeps a massive savings account of foreign currency.
How do they use it? Is it just sitting there?
Mostly, yes, but it's a deterrent. If the dollar spikes because of some panic in New York or London, the BCRP can dip into those reserves, sell dollars, and calm the market down. It's like having a fire extinguisher in the kitchen. You hope you don't use it, but knowing it's there stops you from panicking when the toast burns.
Now, we can't talk about Peru without talking about what's under the ground. The document mentions a strong link to commodities.
The rocks, as some traders call them. Peru's economy is heavily tied to exporting minerals: copper, gold, zinc, and increasingly, lithium.
Copper is the big one, right?
Copper is king. Here's the mechanism. When international prices for copper go up, say China decides to build more cities or electric cars, Peru exports more. That means more dollars flow into the country.
And when the country is flooded with dollars,
The price of the dollar goes down and the sol strengthens. It's like supply and demand. High metal prices usually equal a strong sol.
that sounds great, but it feels like a double-edged sword.
It is, because the sol doesn't just move based on what happens in Lima. It moves based on what happens in Washington and Beijing.
Let's talk about those external bullies. The document highlights the U.S. dollar dominance.
It's the 800-pound gorilla. When the U.S. Federal Reserve raises interest rates, it sucks money out of emerging markets back into the U.S. That usually crushes currencies like the sol.
But the sol resists better than most.
It does. Even during crises like COVID-19 or global recessions, when everyone runs to the dollar as a safe haven, the sol feels pressure, sure, but it doesn't collapse. And that brings us back to the star of the show, the institution running the game,
The central bank.
the BCRP. We need to talk about their specific strategy because it's unique in the region.
Hold that thought, Elena. We're going to take a quick breather. When we come back, I want to know exactly how this central bank manages to fight off global giants, and we need to look at the dark clouds on the horizon, the 2026 elections.
Sounds like a plan.
We are back on the global ledger. Before the break, Elena, you called the Central Bank of Peru, the BCRP, the star of the show. That's high praise for a government building full of economists.
I know, it sounds dry, but in the world of finance, credibility is everything, and the BCRP has rock star status in Latin America.
So how do they actually pull the strings? Is it just a guy with a button that says buy or sell?
It's a bit more sophisticated than that. They use what we call intervention. When the exchange rate starts moving too fast, say the dollar jumps from 370 to 390 in a couple of days, they step in.
To stop the panic.
Exactly. They might sell dollars from those massive reserves we talked about, or use financial instruments like currency swaps to calm the waters. But the most powerful tool they have isn't money. It's reputation.
Reputation.
Yes, the market trusts them. The document specifically mentions the leadership of figures like Julio Velarde. When you have that kind of institutional continuity, the market assumes there's an adult in the room. They know the central bank won't let the currency crash just to fund a political whim.
That independence is rare in the region.
Extremely rare, and it's the anchor that keeps the boat steady when the political storms hit.
Speaking of storms, let's look at the forecast. Chapter 4 of our study outlines the internal risks between 2025 and 2030, because even the strongest anchor can drag if the storm is big enough. What is the biggest threat?
The calendar, specifically the elections of 2026.
Election years. The nemesis of stability.
Always. Markets hate uncertainty. They don't mind bad news as much as they mind not knowing the news. In 2021, for example, electoral uncertainty pushed the exchange rate way up.
Because investors get scared that a new government might change the rules of the game.
Precisely. If there's a fear of radical policy changes, capital flies out of the country and the sol weakens. So, 2026 is going to be a stress test.
What else? You mentioned earlier that mining is the engine. What happens if the engine sputters?
That's the second major risk. Mining conflicts.
Social unrest.
Right. If you have social conflicts or paralyzations that stop mines from operating, you are literally turning off the tap of dollars entering the country. Less copper exported means fewer dollars, which means a weaker sol. It's a direct pipeline.
It feels like the economy is holding its breath every time there is a protest near a mine.
In a way, yes. And then there's the third risk, which is quieter but dangerous. A local economic slowdown. If consumption drops or investment slows, fiscal stability takes a hit because the government collects fewer taxes.
Okay, so we have the fundamentals and we have the risks. Now comes the part I love, the predictions. The study doesn't just give us one number, it gives us 3 scenarios for 2025 to 2030.
Which is the only responsible way to forecast. You can't predict the future, but you can prepare for probabilities. They break it down into optimistic, moderate, and pessimistic.
Like a choose-your-own-adventure book.
Exactly. And each path depends on how those risks we just discussed interact with global prices.
Let's start with the dream scenario, the optimistic one. Paint me a picture of a perfect Peru in 2026.
In this world, the stars align. First, copper goes on a super cycle. We're talking prices between $4.30 and $5 per pound.
That's a lot of money flowing in.
A flood of dollars. Second, the 2026 elections result in a stable government, one that is moderate and pro-investment.
So No drama in the presidential palace.
Minimal drama. The Ministry of Economy and the central bank keep their steady hands on the wheel. And globally, the U.S. keeps inflation low, and China starts growing again at a healthy 5% clip.
If all that happens, where does the dollar go?
Down. In this scenario, the dollar could drop to between
Bienvenidos a la calle
$3.10
financiera
and
más importante de la
$3.30
ciudad.
soles.
Aquí, las grandes inversiones cobran vida al caer el sol. La fusión
That would make
bancaria se anunciará
imported
esta
goods,
tarde.
Phones,
¿Están
cars,
listos los
travel,
informes trimestrales?
much cheaper for Peruvians.
It would be a boom time.
La fusión está
But
cerrada.
there's always a
Necesitamos
but.
informar a
That's
los
the best case
interesados
scenario.
inmediatamente.
We have to look at what is most likely to happen. The moderate scenario.
The middle ground. Let's save that for the next segment. I want to dig into what moderate actually feels like for a regular business owner, and then we have to look at the nightmare scenario.
The pessimistic one. It gets scary.
Stick around. We're going down the rabbit hole of what-ifs right after this. We are back. Elena, before the break, we dreamed about the optimistic scenario where the dollar drops to 3.10. It sounds amazing, but as my grandfather used to say, hope is not a strategy.
Smart man.
So let's talk about reality. The study identifies the moderate scenario as the most likely outcome. What does normal look like for Peru between 2026 and 2030?
Normal is a mix of stability and noise.
Nunca antes se
In
había
this
visto
scenario,
tal
copper
cantidad de
prices
dinero.
don't skyrocket, but
Pertenecía
they
a
don't
los más
crash
ricos
either.
entre
They
los
fluctuate
ricos.
between $3.80 and $4.20 per pound. It's a healthy rate.
And politically?
We see moderate volatility. The 2026 election campaign generates headlines and some nervousness, but we don't see a total institutional crisis. Maybe some mining projects get delayed, but they aren't canceled.
So the engine keeps running, maybe just with a few sputters.
Exactly. The U.S. avoids a deep recession, and Europe keeps inflation under control. In this world, the central bank intervenes occasionally, using swaps or selling dollars, just to smooth out the bumps.
And the number. If I'm planning my business budget for 2027, what exchange rate should I write down?
The projection here sits between 340 and 360. It's a range that allows exporters to remain competitive and importers to survive. It's not a boom, but it's certainly not a bust.
Okay. Now, grab your umbrella because we have to talk about the storm. The pessimistic scenario. What has to go wrong for the sol to finally crack?
This is the perfect storm. It starts with a global crisis, a worldwide recession where investors panic and run to the U.S. dollar as a safe haven.
So the dollar gets strong everywhere.
Everywhere. Simultaneously, the price of copper crashes, let's say to $3 or less. That chokes off the flow of dollars entering Peru. But the real damage in this scenario comes from the inside.
Internal politics.
Yes. Imagine a severe crisis of governance after the 2026 elections, a clash between powers of the state, maybe serious social conflicts closing down mines.
That sounds chaotic.
It triggers the one thing that takes years to fix, a credit rating downgrade. If credit agencies decide Peru is too risky, capital flees.
And the exchange rate?
In this extreme scenario, the dollar could
Los datos
easily
muestran
break the
una clara
psychological
tendencia
barrier
alcista.
of 4.0.
Necesitamos capitalizar
We could be
esto
looking
ahora.
at
Entiendo, pero mi análisis
4.10
sugiere
to
cautela. El mercado es
4.40.
volátil.
Ouch! That's a massive devaluation. It would hurt purchasing power significantly.
It would, but Alex, here's the surprising part. Even in this nightmare scenario, the sol still outperforms many of its neighbors.
That is a bold statement. You're saying even at its worst, the sol is better than the rest.
Let's look at the data in Chapter 6. The study compares the sol to the Chilean peso, the Colombian peso, and the Brazilian real.
Let's start with Chile.
Mira
They
todo
are the
este
other big
dinero.
copper producer. Why is their currency more volatile?
Somos ricos.
The Chilean peso has higher expected volatility,
Dinero,
about
dinero.
10 to 15%. While they
Qué
also
felicidad.
depend on copper, their fiscal policy has been under more pressure recently. The market sees the sol as having a low to medium risk, while the Chilean peso is firmly medium.
In Colombia?
That's a tougher story. The Colombian peso is labeled high risk, with volatility up to 20%.
Why the difference?
Oil versus copper. Colombia depends on oil, which is facing a much harder future than copper. Plus, they have had significant governance questions. The Sol's superpower in this comparison is the credibility of the central bank. It acts as a shield that the others just don't have to the same extent.
It's fascinating. It's like the Sol is the cleanest shirt in the dirty laundry pile.
That's a colorful way to put it, but yes. When global investors look at Latin America in 2026-2030, they see a lot of red flags.
Vende 1000 a este
But
precio.
when they
No,
look at
aguanta,
Peru,
esto sigue subiendo.
they see a currency that, despite the political noise, has structural resilience.
Sell the
So
block
we
now. I
have
don't
the
care about the
scenarios,
price.
and we know
We're
we're
seeing
doing
major
better than the
resistance
neighbors.
at 150.
But what does the future
Get me
actually
out of those
hold?
positions immediately.
There are these global forces coming our way. Rate wars, digital currencies.
The war of rates. That is coming in 2026-2027.
Let's take our final break. When we come back, we're going to give you the practical takeaways. How do you prepare for a war of rates? And what on earth is a digital soul?
The future of money. We'll get into it.
Welcome back to the final stretch of the global ledger. We've covered the rocks, the risks, the politics, and the resilience. But Alea, before the break, you teased something that sounds like a sci-fi movie. The War of Rates?
This
It
is
sounds
absolutely
dramatic,
insane.
doesn't it? But
profits
it's
just
the
keep
most
rolling
likely
in.
global scenario for 2026-2027.
What does it mean for my wallet?
Imagine the U.S. Federal Reserve and the European Central Bank getting into a fight with inflation again. To win, they raise interest rates aggressively.
Okay.
If a super safe U.S. Treasury bond starts paying 5.2% interest, up from, say, 3.8%, investors look at emerging markets like Peru and say, why risk it?
And they move their money back to the U.S.
Exactly. We call it capital flight. If that happens, flows to Latin America could drop by 15 to 20%. That strengthens the dollar globally and puts pressure on the sol. But, and here is the broken record part,
Let me guess. The Sol handles it better than the rest.
you're learning. Historically, the sol depreciates less than the Colombian or Chilean peso in these scenarios. It bends, but it doesn't break.
Now let's look further east. The study mentions a new rivalry between China and the U.S.
The decoupling. This is huge for Peru because Peru is caught in the middle. Peru sells copper to China. If China stimulates its economy, copper prices go up and the sol gets stronger.
But if China and the U.S. start fighting over trade routes,
Then shipping costs skyrocket up to 30 to 40%. That imports inflation directly into Peruvian supermarkets. The sol is critically dependent on Chinese industrial health.
and what about this digital Sol? Is Peru getting its own Bitcoin?
Not Bitcoin, a CBDC, Central Bank Digital Currency. The study predicts that between 2026 and 2030, we might see the rise of a digital sol.
Why would the government want that?
Efficiency. It lowers transaction costs. But more importantly, it fights the dollarization of the economy. If people can use a secure digital sol for everything, they might hold fewer physical dollars. It could drop dollarization from 30% to 20% in 5 years.
Okay, Elena, we've covered a lot of ground. Let's boil this down. For our listeners, whether they are investors, business owners, or just curious citizens, what are the practical takeaways? How do we keep the sol strong?
The study outlines a clear roadmap. Number 1, diversify. Peru cannot just be a copper mine. We need to boost agro-industry, clean technology, and high-value tourism. You can't bet the whole house on one metal.
Number 2?
Discipline. We
Sell
need
50,000 at
strict fiscal
45.
rules.
I need a price check
The
on
moment the
euro.
It's moving
government
too
starts
fast. We
spending
have to
money
hold.
it doesn't
Get me out of
have,
those bonds
the
right now.
spell of the invincible sol breaks.
And for the regular person listening, watch the deficit. If you see headlines that public debt is climbing toward 45% of GDP, that's your warning sign to buy dollars. But as long as debt stays low and the central bank stays independent, trust the sol. It's been a wild ride. We started with a currency that defies gravity and ended with digital money and trade wars.
It's a complex story, but the headline is this. The Peruvian sol is the Swiss franc of Latin America for a reason. It's built on decades of hard work, not magic.
se
That stability
desploma.
isn't guaranteed.
¡Vamos a
No,
la
it's
quiebra!
fragile. It depends on copper prices, political maturity in 2026,
Si cae
and
por debajo
global
de
peace.
este nivel,
But
cerramos
if
la
Peru
posición.
maintains its institutions, the sol will remain a rare beacon
Soy
of stability
rica,
in a
miren todo
volatile
este
world.
dinero.
Elena, thank you for making economics sound less like a lecture and more like a thriller.
Anytime, Alex.
And to our listeners, thanks for trusting us with your time. Keep an eye on the copper price, watch the elections, and stay curious. This has been The Global Ledger.